Hello, it's Tuesday the 7th. I'm FxPlew and this is the market brief. Now, the Bank of England may very well have ended their rate tightening cycle, but the market is still pretty infatuated with monetary policy. Economists from several major banks believe the MPC should be considering a rate cut in order to help boost the economy. But where the vote was 6-3 in favour of a pause, what's been called a hawkish hold was accompanied by the guidance that rates should probably stay higher for longer, as the effect on inflation will filter through over the coming months. Meanwhile, the King will officially open Parliament today. He'll deliver a speech from the Prime Minister setting out the government's agenda for the new session of Parliament. So if you're into all that pomp and ceremony, it'll be all over the telly box from about 11 a.m. this morning. Over in the US, Powell is due on this week. He remains one of the more hawkish members of the Fed, but he does look to have been outvoted recently, where he thinks there's still room for one final rate hike before year end. Central banks tend not to hike just before Christmas, so he may very well have to settle for rates staying higher for longer. Looking ahead to next year, market speculation will shift from inflation towards the growth numbers to provide clues over when we'll see the first rate cuts considered by the Fed. Meanwhile, in the market, the dollar seems to have recovered after the non-farm payroll sell-off. The dollar index peaked around 105.30 yesterday. That was as sterling lost a bit of ground against the greenback. We fell down to close around 123.40 against the dollar yesterday. We kick off this morning from around 123.15 against the dollar, about 115.15 against the euro, and euro dollar is around 106.95 on the open this morning. It's a chilly one this morning, but I'll be back tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.